This video is a review of Suzuki Motors' financial results for the first quarter of fiscal year 2025, covering the period from April to June 2025. Suzuki Motor Corporation manufactures automobiles, motorcycles, and outboard motors, and is known for its small cars, compact SUVs, motorcycles, and all-terrain vehicles. Suzuki has a major presence in markets of India, where it operates through Maruti Suzuki India, one of the largest car manufacturers in the country. In the first quarter, all revenue, operating profit, and net profit also declined year-on-year. This was mainly due to the stronger yen, rising raw material costs, and lower unit sales in India and Europe. Japan's automobile, motorcycle, and marine businesses performed well. In India, higher exports offset the drop in domestic sales. Despite these challenges, the full-year forecast remains unchanged. Suzuki recognizes that the business environment remains difficult and uncertain. However, they will continue to invest in R&D, capital projects, and human resources to strengthen the earnings base and achieve the midterm management plan. Looking ahead, market conditions in India are expected to improve in the second half of the fiscal year, supported by policy interest rate cuts and income tax reductions. In addition to the EV Tara, Suzuki plans to launch a new SUV to boost its growth. Financial results highlights. In the first quarter, revenue fell 4.1% to 1,397.8 billion yen due to lower sales and currency effects. Operating profit dropped 9.8% from lower sales and higher growth investments, while net profit declined 10.7% to 102 billion yen. Both revenue and profit declined year-on-year. In the automobile segment, sales and profit decreased, and the business environment remains challenging with currency fluctuations and rising costs, but India continues to be the company's most important market. Automobile sales in India declined domestically, yet exports increased and helped offset part of the impact. Suzuki is reinforcing its position by expanding SUVs, promoting battery electric vehicles, and investing in local production capacity. Suzuki expects market conditions in India to improve in the second half of the fiscal year, supported by interest rate cuts and income tax reductions. Alongside the EV Tara, a new SUV will be launched to restore growth momentum. Overall, India remains central to Suzuki's midterm growth strategy as both a key domestic market and a global export hub. In the motorcycle segment, despite a slowdown in Europe and North America, strong growth in India, particularly in scooters like the Access 125, drove higher production and sales. Overall, production and sales of all motorcycles increased year-on-year. By your side, midterm management plan. Suzuki aims to achieve 8 trillion yen in revenue and 800 billion yen in operating profit by FY2030 through stronger profitability and growth in key markets. India remains the core growth driver, with plans to expand annual capacity to 4 million units, strengthen SUVs and BEVs, develop the market as a global export hub, and invest in charging and recycling infrastructure. Alongside this, Suzuki will invest 2 trillion yen each in R&D and capital expenditure, focusing on electrification, new technologies, and sustainable growth. Suzuki is facing pressure to accelerate EV development as it lags behind other major automakers in electric vehicles. At the same time, India's goods and services tax cuts are expected to boost economic activity and consumer demand, supporting higher sales in this key market. Shareholder return policy. Suzuki will focus on stable and continuous dividends rather than profit-linked dividends, adopting a new dividend on equity target of 3.0%, higher than the past average of 2.5%. Share buybacks will be considered flexibly, based on factors such as capital efficiency and stock price levels. Suzuki emphasizes rewarding long-term shareholders, especially Suzuki fans, while supporting its growth strategy toward FY2030. Stock price. This chart over the past year shows the stock price in Japanese yen at 2,206 as of September 24. This chart shows the stock price in US dollars at 58.10 as of September 23. In the first quarter, both revenue and profit declined, yet Suzuki's stock price has been soaring even after the earnings announcement. While the overall upward trend of Japanese stocks plays a role, the rise in Suzuki's share price is also driven by growing expectations for economic recovery following India's tax reduction policy. Current PBR is 1.42 and PER is 13.3. Dividend yield is 2.4%. Compared with past PBR, PER, and dividend yield, the current stock price appears higher in terms of PBR and PER. Dividend yield percentage is about the same figure. There is strong optimism about India business, yet given the recent surge in Suzuki's stock price, it appears somewhat overvalued. Conclusion. In the first quarter, Suzuki faced declines in revenue, operating profit, and net profit due to currency effects and rising costs. With continued investments in R&D, capital expenditure, and new vehicle launches, Suzuki aims to improve and achieve its midterm targets. India remains central to Suzuki's growth strategy, supported by tax incentives, rising exports, and plans to expand new vehicles. Hopefully, the Indian economy will benefit from the tax cuts, and that'll help drive more growth.